Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar has taken further casualties over the last few days since posting a weaker than expected March quarter inflationary number released on Wednesday, which has now increased the possibility of an RBA interest rate cut either in May or June, given to the fact of the disappointing figures. Looking ahead, if the RBA does action one interest rate cut, it is unlikely to be considered significant enough to make a quantifiable difference on the inflationary data. Therefore, a second interest rate cut is liable before we can ascertain whether the first cut initiated any change. The Australian Bureau of Statistics, ABS, released on Wednesday the CPI quarter-on-quarter number, which crushed the forecast of 0.2% and came in at 0%, indicating growth over that quarter was minimal. Looking ahead though, from a technical point, we've crushed through many support levels now and now holding to the bullish foundations of 69.40.60. We are oversold, but the trend is getting somewhat a little bit concerning after the fact that we did post from the lows sub 70 cents a long-legged doji. Keep an eye on this as we could see a small retracement up to 70.55 with a cap now holding around 71 cents. Looking at further supports, we now see the euro being crushed at 111.60.80. This was triggered on the flip side of the dollar index, which smashed through the resistance of 97.60 and posted a fresh high last seen back in May 2017 of 98.30. Earlier, the European Central Bank ECB warned that the risks surrounding the euro area growth outlined could remain or tilted to the downside. The ECB's monthly economic bulletin update suggested the central bank will continue to support the eurozone area as the information that has become available since the Governing Council's monetary policy meeting in March confirmed slower growth momentum. From a technical point though, we are getting to the lower side of the range, but the ADX has just broken into a bearish trend, and on the flip side, a bullish trend for the US dollar. Marrying up with the two indicators does support maybe a target of 110.70.80 now, with the resistance seen for the short term at 112.15 to 25. Well, dollar yen took another staring challenge to the upside, and as you can see, clearly rejected the 112 area. Still capping at 112.45, the market plummeted to a low of 111.36. Now, the Bank of Japan kept its interest rates on hold as widely expected, although the governor said that the global economic uncertainties had drawn policymakers' attention and therefore wanted to clarify that they will keep rates low for a very long time. Now, my call at the moment still holds to 110.70.80 and reassess from there. Any advances should continue to fail above 112. The break of the support line, which came in at 129.70 from the descending triangle, as you can see, was crushed, and we had further follow-on to the downside as the market strengthens the bearish trend. Now, the target of 125 may take a little longer to get to because it is a broader picture. Nevertheless, from a trading fact is that continue to lower your stop losses as well with the Australian dollar if you're short, and also with the euro if you are short, just in case we do get a snap to the upside. But the resistance, as you can see, comes in from where the break level is, which is, I do believe, will be capped now at 129.70.85 with a minor resistance at 129.20. The immediate target is at 128.10 to 127.45 to the downside. Gold is showing some modest recovery and now increasing to the upside. I believe we may have seen a base after taking the challenge towards the bottom side of the range of 1,255 to 65. If we are back in a bullish range, then we are expecting and soon see a challenge of 80 to 81. We do need to see a break above 88 to reinstate the upside and give a potential target above the 1,300 to about 1,320. At this present time, oil is still looking for a direction, but I believe the market has broken down a little bit over the last 24 hours and therefore could see further risks to the downside and challenge the support region of $63 a barrel. A break beneath there would give further scope towards the region of $61.5 to $60 a barrel, with the resistance at this stage seen roughly around $66 to $67. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoyed the great new day and a great start to the new weekend.